Question 361. Under the concept of hypothecation, a borrower maintains his status as legal owner of the property and retains his right of possession, while the lender holds A. Naked title, B. Equitable title, C. Bare title, D. All of the above. Correct answer is D. All of the above. Bare title and naked title are the same terms as equitable title, meaning the lender has a security interest in the collateral property. That interest will become a legal title if the borrower defaults or will end when the loan is fully repaid. Question 362. Which of these provides a taxation benefit related to the ownership of income-generating real property? Income-generating real property can offer several tax benefits, including 1. Interest deduction. Mortgage interest paid on a loan used to purchase or improve the property can be deducted from taxable income, reducing your overall tax burden. 2. Treatment of capital gains. When you sell the property for a profit, capital gain, the tax rate on that gain might be lower than the ordinary income tax rate. There are specific holding periods and other qualifications to qualify for the lower capital gains tax rate. 3. Depreciation deduction. The cost of the property, excluding the land, can be depreciated over a set period, allowing you to deduct a portion of that cost from your taxes each year. This reduces your taxable income even though you haven't necessarily sold the asset. These tax benefits can significantly reduce the overall tax liability associated with owning income-generating real estate. It's important to consult with a tax advisor to understand how these benefits apply to your specific situation. Note that the deduction of interest and favorable treatment of capital gains apply to all real properties, not just income-generating ones. Question 363. Escrow services are normally provided by title companies in A. Northern California, B. Southern California, C. Los Angeles County only, D. Title companies are not authorized to serve as escrow agents. Correct answer is A. Northern California. The practice of title companies directly offering escrow services differs between Northern and Southern California. In Northern California, it is the more common practice for title companies to provide escrow services as part of their integrated offerings. While independent escrow companies also operate in the North, title companies frequently handle both title insurance and escrow functions for real estate transactions. Conversely, in Southern California, independent escrow companies are more traditionally prevalent and often handle escrow services separately from title insurance providers. While title companies in the South can also offer escrow, it's not as universally the norm as it is in the North. Therefore, based on the typical regional practices within California, escrow services are normally associated with and provided by title companies in Northern California. Question 364. Who is entitled to the commission when a property is not listed at the time of the offer and has been shown to a buyer by more than one broker? A. The broker who is the procuring cause, B. Whoever listed the property prior to the sale, C. No one, D. All brokers who showed the property. Correct answer is A. The broker who is the procuring cause. In real estate, the procuring cause is the broker who initiated a series of uninterrupted events that led directly to the sale. This typically involves being the first to introduce the buyer to the property and actively working to bring about an agreement between the buyer and seller. Since the property was not listed when the offer was made, there's no pre-existing listing agreement to dictate commission terms or which broker has the exclusive right to sell. The fact that multiple brokers showed the property complicates the situation. However, the key factor in determining entitlement to the commission, assuming the seller agrees to pay a commission to a broker who brings a buyer, is which broker's efforts were the direct and primary reason the buyer decided to purchase the property. Ultimately, the payment of a commission in this unlisted scenario would depend on an agreement reached between the seller and the broker who claims to be the procuring cause. The seller might agree to pay that broker, negotiate a split if they believe another broker also played a significant role, or potentially refuse if they don't believe any broker was the procuring cause. Question 365. Private property that has been confiscated by the government for non-payment of taxes can be sold at public auction by the county tax authorities. A. Upon public notification of the impending sale. B. Upon public notification of the impending sale and mailing the notice to the property owner in arrears. C. Without notice. D. After posting a for sale sign on the property. Correct answer is B. Upon public notification of the impending sale and mailing the notice to the property owner in arrears. Due process of law requires that property owners be given adequate notice and an opportunity to address the tax delinquency before their property is confiscated and sold by the government. This typically involves several steps. 1. Notice of delinquency. The property owner is usually notified multiple times about the unpaid taxes and the potential consequences of non-payment. 2. Public notification. Before a tax sale can occur, the county tax authorities are required to provide public notice of the impending auction. This is typically done through publication in local newspapers and sometimes online postings. 3. Direct notice to owner. In addition to public notification, the county is generally required to make a reasonable effort to directly notify the property owner in arrears about the upcoming sale. This often involves mailing a notice to the last known address of the owner. Question 366. The safety clause in most exclusive listing agreements entitles the broker to a commission if the property is sold even after the listing term expires, provided that a broker used his best efforts to procure a buyer during the listing term. B. Broker had shown property to at least 5 potential buyers during the listing term. C. Broker had negotiated with the eventual purchaser during the listing term. D. All of the above. Correct answer is C. Broker had negotiated with the eventual purchaser during the listing term. The safety clause, also known as a holdover clause or extender clause, in an exclusive listing agreement is designed to protect the broker. If a sale occurs shortly after the listing expires to a buyer who was introduced to the property by the broker during the term of the listing, the key element that triggers the safety clause is typically that the broker 1. Introduced the buyer to the property during the listing term. This often means the broker showed the property to the buyer, provided them with information about it, or otherwise had substantive contact with them regarding the specific property. 2. The eventual sale to that specific buyer occurs within a specified period after the listing expires. This period is defined in the listing agreement. While the broker's efforts are generally expected, the safety clause usually hinges on the connection with the actual buyer who purchases the property shortly after the listing ends. Question 367. The following would be factors affecting economic obsolescence in a particular area, except A. Zoning changes. B. Oversupply of properties. C. Inadequate number of electrical outlets in a home. D. Recession. Correct answer is C. Inadequate number of electrical outlets in a home. Economic obsolescence, external obsolescence, arises from factors external to the property itself and is usually beyond the control of the property owner. These factors affect the desirability and value of properties in a specific area. Let's analyze the options. A. Zoning changes. Changes in zoning can significantly impact property values in an area. For example, a change from residential to industrial zoning can negatively affect the value of existing homes. This is an external factor. B. Oversupply of properties. If there's an oversupply of similar properties in an area, it can lead to increased competition, lower prices, and longer marketing times, negatively impacting the economic viability and value of individual properties. This is an external market condition. C. Inadequate number of electrical outlets in a home. This is an example of functional obsolescence. Functional obsolescence arises from issues within the property itself, such as outdated design, poor layout, or insufficient features compared to current standards. While it reduces the value of that specific home, it doesn't inherently affect the economic conditions or desirability of the entire area. D. Recession. An economic recession can lead to job losses, reduced consumer spending, and decreased demand for real estate across an entire area, causing property values to decline. This is a broad external economic factor. Therefore, inadequate electrical outlets are a property-specific issue, functional obsolescence. While zoning changes, oversupply, and recession are external factors affecting the economic conditions of the area. Question 368. One of the key elements of determining the value of a property is demand. But for demand to exist, it must be accompanied by A. Professional appraisal. B. Purchasing power. C. Financing. D. Staging. Correct answer is B. Purchasing power. In real estate, demand refers to the desire and ability of potential buyers to purchase a property. While desire is important, it's not enough on its own to create effective demand that drives value. Purchasing power refers to the financial capacity of buyers to actually make a purchase. They must have the necessary funds, cash, access to credit, etc., to translate their desire into a transaction. Without purchasing power, there might be interest in a property, but no actual demand that can impact its value. Question 369. Which of the following statements regarding an offer to purchase real property is correct? A. The offer must be in writing, but the acceptance does not. B. The acceptance must be in writing, but the offer does not. C. Neither the offer and acceptance need to be in writing, unless the property price exceeds $1 million. D. The offer and acceptance must both be in writing. Correct answer is D. The offer and acceptance must both be in writing. California's Statute of Frauds, Civil Code Section 1624, requires certain types of contracts to be in writing to be enforceable. Contracts for the sale of real property are specifically included in this requirement. An offer to purchase real property, when accepted by the seller, creates a binding contract for the sale of that property. Since the underlying agreement, the sale of real estate, must be in writing to be enforceable, both the offer and the acceptance, which together form the agreement, must also be in writing. The writing requirement applies regardless of the property price. Question 370. An unlawful detainer action can be commenced by a landlord against a tenant when A. The tenant fails to leave upon the expiration of his lease. B. The property is sold. C. There is a month-to-month lease, and the tenant does not move out after a 30-day, 60-day or 90-day notice to quit. D. All of the above. Correct answer is D. All of the above. Here's why an unlawful detainer action, which is a legal process to evict a tenant, can be commenced in each of these situations in California. A. The tenant fails to leave upon the expiration of his lease. When a lease with a specific end date expires and the tenant remains in possession of the property without the landlord's consent, they become a holdover tenant. The landlord can then initiate an unlawful detainer action to regain possession. B. The property is sold. While a sale itself doesn't automatically terminate a lease, the new owner may have grounds to terminate the tenancy depending on the terms of the lease and California law. If the lease allows for termination upon sale, or if it's a month-to-month tenancy and proper notice is given by the new owner, and the tenant fails to vacate after receiving a valid notice to quit, an unlawful detainer action can be filed. C. There is a month-to-month lease, and the tenant does not move out after a 30-day, 60-day or 90-day notice to quit. In California, a landlord can terminate a month-to-month tenancy by serving the tenant with a proper written notice to quit. The length of the notice required depends on how long the tenant has resided at the property. 30-day notice if the tenant has lived there for less than 1 year. 60-day notice if the tenant has lived there for 1 year or more. 90-day notice in some specific situations, such as when the property is being withdrawn from the rental market under the Ellis Act. If the tenant fails to vacate after the expiration of a valid notice to quit, the landlord can proceed with an unlawful detainer action.